Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A third bearish black crow on Friday, and a follow-on from the previous session's bearish closing black Maribozo and earlier pipe top. The market is still following down within the late June to mid-August bearish shift pitchfork, finishing a little above the middle time, currently at 96.80. This pitchfork is an offshoot lower from the earlier big old January to May 2021 bearish Andrews pitchfork. Now this venerable pitchfork had shown the way lower for so long. Looking below, we now have the October 2002 low at 96.85 and the August 2002 low at 96.20. These are within a widespread and somewhat diaphanous area between 97.22 and 96.20, with a smaller band below between 95.23 and 95.40. Meanwhile, overhead we have the upper time, currently at 97.80, I think it is. Yeah, 99.78. Closely allied with the declining short medium moving average, currently at 1,001. There is the possibility that the action since mid-September may be a possible double bottom in the making, but it is so early as yet, and I wouldn't hold my breath over it. And so far today, a further follow-on lower down to the October 2002 low and the middle time right now. Cable, aka sterling against the US dollar. A third bearish black crow on Friday and a continued follow-on lower to last week's bearish double and outside day, which also constructed a pipe top as well. The top of the action was capped by the middle time, currently 112.08, of the broken June to August bearish Andrews pitchfork. Seems this pitchfork is still resonating in the market despite having been broken. I've drawn a new acute mid-September to early October bearish Andrews pitchfork. At the moment this is purely speculative, and I'm not quite prepared to amend. I'm actually quite prepared to amend it to a shallower bearish shift pitchfork, or even disregard it completely. Overall, the market is making its way down through the congestion from January 1985 between 111 even and 113 even. This doesn't seem that great an area, as it was effectively pierced in late September, though I do note that we have little clear support until the 108.83 and 108 even areas. Now so far today, a limited move lower so far, tentative to say the least, and looking like an indecisive, spinning top or doji cross possibly right now. Euro against sterling, a fourth bullish white soldier on Friday, but it was looking more like an indecisive spinning top than any bullish pattern, having failed to push up over the previous session's high. The top side was again limited by the remnants of the September-based lower bull channel line, currently at 88.15, and more importantly by the middle time, currently 88.35 of the April to August bullish Andrews pitchfork. However, below we have three interesting levels which may or may not act as supports. So far they have, sort of acted that way, but not decisively. They are the April 2021 high at 87.19, the Fibonacci level at 86.98, and the April 2020 low at 86.69. The last one seems the most effective, as we have little below that until the rising short medium moving average, that's currently at 85.98. However, overall, we are still within the same previously mentioned bullish April to August Andrews pitchfork, close to the middle time, and that is the central driver of this market. Now so far today, not much, a slightly lower open, but the action remains within Friday's range, though a little bearish right now. US dollar against the Indian rupee. A bullish closing white Maribozo on Friday and third bullish white soldier that made another new all-time high. Second time we've seen a new all-time high made last week. There is now a rudimentary bull channel come ascending wedge pattern, currently between 81.78 and 83.02. However, I have at the moment limited confidence in this pattern, as it is just too steep for my liking right now. But it is what it is. It is what it is, and I cannot deny it being there. At the moment, anyway. Looking below, we have some congestion in the 81.45 to 81.50 area, but it is recent, formed over the last 2 weeks, though it does have the old broken upper time, currently 81.63 of the early June to early August bullish shift pitchfork, running through and now over it. Again, I'm not too keen on this support right now, but because it has been broken in the past and will at best be a shadow of itself, though I take the point that it may be better working in conjunction with the congestion. The only issue is that it is moving higher and away from at the rate of 2 piastres a day from that congestion. Now, so far today, well, an interesting piece of action. A low open and a fall down towards Friday's open right now, and looking like a combined bearish Harami and bearish opening Black Mariposa. If you take Friday's and today's action so far together, then we may well have a possible pipe top as well, though I'm not entirely convinced on that point as yet. US dollar against the Brazilian real. A reactionary bearish Harami on Friday with a long tongue on top that stretched up to the flatlining short moving average, currently at 524.65 for the second time last week, pushing up over the 50% Fibonacci line of the March 21 to April 2022 move, but closing well below it. Now, below the market, we have a 3-layered core of nearby support. We've got the rising, number one, the rising medium moving average, currently 517.24. This is mainly acted on a closing basis, but it's still there. The number two, the lower time, currently at 514.42 of the late May to late August bullish shift pitchfork. And 3, the declining long moving average, currently 512.54. Which incidentally is the one I have the least confidence in right now. Meanwhile, on top, well, I did say the short moving average before, but I think that might be incidental, as the 525 area has been capping rises in early September before the big move up of last week. So it's worth considering. I'd also add the 50% Fibonacci line of the May 20 to April 2022 move at 522.76, but beyond that, bar a Fibonacci level at 538.13, we seem to have little in the way until the Fibonacci level at 543.81. However, the key drive right now, and it is still somewhat nascent, is the bullish shift pitchfork for now. US dollar against the Mexican peso. A bearish engulfing pattern on Friday, as the overhead resistances, primarily the medium moving average, currently at 20.1280, and the long moving average, currently 20.2302, but also the short medium moving average, currently 20.0914, all pressured prices, and we ended lower, notably back below the upper time, currently 20.0359 of the broken March to July bearish Andrews pitchfork. This bearish Andrews pitchfork is mainly redundant, being overtaken by the bearish shift pitchfork for the same move, especially the middle time, currently at 19.8758. The reason I thought to highlight these two times is that in about 2.5 weeks they will cross over. And for those who know me well, that is when I look out for one or more of the following to happen: a change in trend, a reinforcement of an existing trend, volatility. These usually lag the crossover by a session or two, but it's worth watching out for what happens on or around the 28th of October. Now, in the bigger picture, the market has been building since mid-August between roughly 1990 even and about 2020 even, with occasional forays outside. This is still the picture, with the current short-term incentive being lower, but overall no significant feature developing in either direction. Now, so far today, well, a slight follow-on lower, but limited. We are still within last week's range, though not that far from the base of support. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with these broadcasts. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.